Well, the recent jobs report and gross domestic product numbers were better than expected, but what does it mean for you, being in the best position for your financial situation? Joining us with some insight is Corey Reamer with the Welch Group, and some of you might recall he played a little football too at Alabama.
Back in the day.
Back in the day.
Yeah, it's been a long time.
Let's don't say that far.
Yeah.
All right, first of all, let's put these job numbers in perspective because they were better than what people thought. But what does it mean? Give us the impact of that.
Yeah, absolutely. Well, recently everybody's been expecting that the economy is going to be slowing down. Yeah. A lot of times people were expecting the Fed was going to initially start cutting rates as early as this March. We've seen a huge uptick in rates over the last year, and the Fed's been expecting to have a lot of rate cuts coming up this season. But what we're seeing happening is the jobs number that came out on Friday really beat expectations, and unemployment rate is still extremely low. So it's given the Fed a lot of ammunition to hold rates where they currently are. They might not be cutting as fast as some people expected.
So on people out there, in terms of strategies, what should they be thinking about right now? Because we know the Fed is expected to start cutting rates maybe late spring, early summer.
Yeah, right now it's kind of bumped back. Early on it was expected to be sometime in March, but right now it's really looking like it's going to be later in the year, maybe sometime this summer or in the fall. But right now, if you're saving, it's still a good time to save. You're able to get some 5%, somewhere around 5% risk-free money in some of the money markets or in some of your CDs accounts at your banks. It's also a good time to start looking at paying off some debts as well, because we know that interest rates really are tied to for credit cards. The rate that you're paying on credit cards, they can get high, and they're bumping up. And so it's a good time to be paying off debt, to be thinking about that as well.
If you are a home buyer, though, I guess that's good there, because if you know the Fed is going to start cutting rates, and we know that's the prime lending rate, so you could get a pretty good deal somewhere down the road. But what about that coupled with where the housing market is right
now? Really, it still is. There's a lot of demand in housing right now, but there's been some of it that's been kind of backing off just because of interest rates are where they are. People are afraid to jump into the housing market with interest rates being so high. That could reduce the demand or the competition if you're out there looking to buy a house. And if the Fed does end up cutting rates this year, you're going to be able to refinance your mortgage into a lower rate at some point in the near future. So if you want to have less competition in the housing market, it's a good time to go out there and start looking right now. And we're still down from the recent peaks of about 8% on interest rates, on mortgage rates here recently, getting closer to that 6.5%.
All right, real quickly, we got some people who are, obviously if you're younger, you got a 401k, you kind of want to stay the course. That's what they say based on historical data. But if somebody who's close to retirement, should they start to think about getting more conservative because of possible headwinds down the road? Yeah,
absolutely. I mean, the expectation is it's really not a great thing to start trying to time the market, but the stock market has done extremely well with the economy continuing to be resilient as it has over the last 6 months. But you start looking at where you can invest your money. There's still good returns on taking some of that risk off the table. So it's definitely a good time to just pay attention to what you have coming down the road, what the economy looks like. Pay attention to these job numbers that continue to come out on a monthly basis, because the Fed's really paying attention to those on when they're going to initially start to cut those rates.
All right, we know you guys will be paying attention to it as well. Corey Reamer with the Welch Group. We do appreciate it. Thank you.
Hey, absolutely. Thank you.